Hello and welcome to Buy, Hold, Sell, brought to you by Livewire Markets. I'm Matthew Kidman. Well, we're about to have, or we've already had one, and we're about to have a series more of interest rates cuts if the market is right. But that kind of tells us that maybe the economy's slowing down, and that's going to be quite difficult for a period, but there's always companies that do well in harder economic times. And to have a chat about the different stocks that might be in that category, Matt Haupt from Wilson Asset Management and Tim Johnston from Tyndall Asset Management. Matt, I'll start with you. Infrastructure, tollways, cars go along those tollways, doesn't vary much. Transurban, buy, hold or sell?
Buy. We think the market is a little bit too concerned about their push into the US, thinking they'll do something really large. We don't think they will. I think they're great operators. They're going to partner with very experienced people in the US, so it's a buy for us.
Yield's pretty good, rates come down, prices can go up. Transurban, buy, hold or sell?
For us, it's a hold, only because the total return expectations just not as good as there are opportunities elsewhere in the market. So for us, it's a hold.
Okay, let's get on to the next one. One of Australia's great growth stories, gone in from industrial warehousing and now it's a data centre builder. Kidman Group, buy, hold or sell?
That's a buy. It's derated enormously in the last sort of 3 months as the AI narrative's sort of broken. We don't think the outlook for data centres is materially different in the inferencing space, which is where Kidman's playing. So that long pipeline of conversions to data centres is intact, and for us it's a buy.
Matt, the comment's always been great company, expensive. Well, it's come off a bit. It's like 15%, 20% cheaper than what it was. Kidman Group, buy, hold or sell?
It's a buy for us. I think the industrial business, obviously with tariffs, could get put under pressure. It's probably worth $22, $23 the industrial business. So you're paying, $3, $4 for the data centre rollout. We think there's an incredible pipeline there. They've raised equity at a very good price. So I think it's a buy here.
Okay. Real estate always goes up, doesn't it, when we cut rates? REA, probably the most leveraged. Buy, hold or sell?
Hold. Just can't get there with the valuation. Great company, great model. Valuation just can't get there, so hold.
Okay, Tim. Valuations don't matter with companies like this, do they?
They do to a value manager, unfortunately.
Buy, hold or sell?
It's a sell for us. Trading on nearly 50 times earnings, which, it's a great business, but at 50 times earnings, you've got to have a lot of conviction in the outlook. And for us, with CoStar coming in, there's not enough conviction to pay 50 times earnings.
CoStar being the ones that have bought Domain.
Correct.
Okay. All right. Now, a company that doesn't have the shine or the gloss that REA and has been a controversial stock in the Australian market over the years, but a good retailer, Harvey Norman, buy, hold or sell?
That's a buy, trading at less than 14 times earnings. Its product mix is probably well suited to the near-term outlook in terms of improving consumer discretionary expenditure, particularly on the housing-related side of things, as it's got more flooring and furniture than its direct competitors. So for us, it's a buy.
Go Harvey, go. Matt, it's been a tough stock over the years, but as Tim points out, it's got a bit of leverage there into an uptick in the housing market.
Yeah, for us it's a hold. For all the reasons you mentioned about the checkered history, the incremental buy is just not there for us. So we'd rather look in other places. So agree with Tim on thematics it's a buy, but the incremental buy is just not there, liquidity-wise.
Okay, let's get back to a bit of infrastructure. APA Group, buy, hold or sell?
Buy. Great outcome in Queensland with the regulation on pipelines. Very defensive, can fully fund their growth profile. Buy for us.
APA, Tim, Matt's outlined it, why he likes it.
Totally agree, it's a buy. The yield's compelling, the defensiveness of the revenue stream's compelling, and the valuation's compelling. It's a buy.
Okay, now we get to the great point, is you can give us a stock that you like that will thrive, even though economy might be a bit tough, but rates are lower.
Yeah, I think Stockland's is a stock that people should have a look at. It's obviously partway through a bit of a transition, new management coming in a few years back, improving the quality of the assets in that business, getting rid of retirement, which was low returning, pivoting towards land lease, which is much higher returning. And in addition to that, it's the most leveraged play to an improving demand for housing in an undersupplied housing market.
Very undersupplied. Matt, that's not a bad dynamic. Tight supply, rates coming lower, increased demand, that good? And how do you play that?
Very good. I'm going to do a derivative of that, that group. So
the competitor.
Yeah, the competitor. Like tough few years. Couldn't build without they didn't make any margin on builds because of subbies going under. just cost of goods, but that's all cleared now. You've got a bipartisan government policy supporting housing. You're going to have lower rates, credit availability's there. Mirvac's about 40% office, that's been on the nose. You've got cap rates coming down and development going well. Like for us, it's a lay-down buy.
There you have it. We're going to have lower rates, and instead of going out to buy a really expensive house, the team here are giving you some really good tips where you can make money anyway. So if you enjoyed that show, give us a thumbs up and don't forget to subscribe to the Livewire YouTube channel.